welcome back after that break. So now we'll be starting with the new topic called Ind AS 40 that talks about investment property. A very small standard, nothing to break your head much about. Okay. Usually they will combine this with another standard and ask a question. A popular way is Ind AS 16, 38, 40 and all, they'll combine and ask. Okay. But if at all individual question comes, I believe at best separately as a 2-marker MCQ question. Beyond that, doubtful, because it doesn't have too much of big concept as such. Okay, first we will dive into this application, no need to worry. So directly let's dive into this thing called investment property. Okay, why are we studying this particular standard is, sir, if you have any investment property, you need to show that investment property separately in balance sheet. If it is investment property, you need to disclose it separately. Okay, now that's a reason. Now, what is this investment property? So if you want to call a property as an investment property, one, it should be either a land or a land and building. It should be either a land or a building, okay, which you are holding to get some rental income or capital appreciation purpose, or both. You know, our great grandmother, so our father, so and all, their favorite asset class was, if you tell them investment, they will say, purchase land, purchase gold. These two are their favorite, yes or no? If you ask them, why are you purchasing any land or building, what will they say? I can purchase now at a very less value. In future, I can sell it at a higher value. Yes or no? That means they are holding that particular land as an investment for what purpose? For capital appreciation purpose. Capital appreciation means, today, let's say you purchase the land for 10 lakh. After 5 years, its value will be 10 lakh or something else. Usually more. Okay, let's say after 5 years, its value has become 50 lakh. You purchased it for 10 now. After 5 years, it has become 50 lakh. Means your capital has appreciated by how much? How much is your gain? 10 has become 50 lakh means the appreciation in value is 40 lakh. So such assets only we refer to as what, sir? Investment property. So investment property only talks about either a land or a land and building, or maybe both. Either land or building, or land and building both, which you are holding for what purpose? An entity has purchased this land and building for what purpose? Either to let it out and get some rental income, or capital appreciation, meaning for appreciation in value, or maybe for both the purpose, both capital appreciation and rental purpose. That is what is investment property. Okay, sir, everybody, we'll decode the definition in a bit, small way, we will define it. Is that okay? All right. Another one is, sir, it's not necessary the entity should let out the whole building. It's not necessary that the company should let out the whole building. Even a part of the building is also can be considered as investment property. Like, to give you an example, let us say a building has 2 floors, ground floor and first floor. Ground floor, company is using it for their business purpose. Company is using it for their business purpose. First floor they have let out. First floor they have let out. That means from ground floor, are you receiving any rental income? No. Is your intention to use the ground floor for letting out or capital appreciation purpose, or your business purpose? Business purpose. Which floor have you let out? First floor only. So whole building have you let out, or only one part? Only one part. That means your first floor becomes what, sir? Investment property. So it's not necessary that the whole property should be let out or held for capital appreciation purpose. Even part of an asset can also be an investment property. Okay, people, everybody? Yes. If you remember, in PP, we saw a definition of PP. What are those definitions? Tell me once again. One, it should be a tangible asset held for use. Usage should be what? Either to produce goods, or to render a service, or administrative purpose, or rental purpose. Rental purpose asset becomes what, sir? Investment property. So if you are holding any property either to produce goods, or render a service, or administrative purpose, that property will be shown in your balance sheet as a property, plant and equipment. This standard gives that PP a fancy name called OOP. OOP means owner occupied property. Owner occupied property, meaning if you are using a property for your business purpose means either to produce goods, or render a service, or administrative purpose, you will show that property in your balance sheet as a PP. This standard refers to these property only as another name called owner occupied property. That's what is written over here. Owner occupied property. Got the distinction between IP, investment property, henceforth I'll refer it to as IP. Owner occupied properties, henceforth I'll refer it as OOP. Got the distinction between the two? Tell me once again, what is the difference between these two? OOP means you're using it for your business purpose, that is goods, service or admin. Investment property means you're holding it for rental purpose or capital appreciation purpose or maybe both. That's all it is. Okay, people? All right. Suppose I'm a real estate dealer. I'm a real estate dealer. So what is my business then? Buying and selling land and building. In that case, can I show land and building as an investment property or it becomes inventory? Inventory. That's what they're trying to say over here. Okay. Fine. Good enough. So it got the distinction between all the three: IP, OOP and inventory. If you are selling the property as per your ordinary course of business, then it becomes inventory and you will apply Ind AS 2. If you are holding a property with a sole intention to let it out and get some rental income, then it becomes investment property and you will apply Ind AS 40. If you are using that land and building for your business purpose, that is goods, service or administrative purpose, then it becomes owner occupied property or property, plant and equipment. That's all it is. Done. There's one more feature in the definition. Sir, it's not necessary that you should legally own the building. It's not necessary. For it to be investment property, it's not necessary that you should legally own the building. Let us say you took the building on lease. After taking the building on lease, you subleased. Subleased means you further let it out. Like let's say A Limited is the legal owner of the asset, legal owner of the building. They gave this building on lease to B Limited. Okay, fine. In this only we used to call the A Limited as the lessor, B Limited as the lessee. In AS 19 and all we have studied. Yes or no? Now, after taking the asset on lease, is B Limited using this? No. They further leased it to another company called Z Limited. This we call it as subleasing. This is okay. More about all this we will study in Ind AS 116, maybe after 30 days or so. Fine now. So this is. Now you would tell me, if B Limited further leases it to Z, what is B Limited getting here? B Limited has to pay rent to A. That's okay. B has to pay rent to A. That's okay. But B Limited is also recovering rent from Z. Rent received from Z. Correct or no? All right. Now, in B Limited books, in B Limited books, this building becomes your investment property as an IP. Because B has subleased it and getting some rental income. So it is not B Limited asset. No, can B Limited show it as an asset? Yes, B Limited. Whenever you take an asset on lease, as per Ind AS 116, lessee has to show something called ROU, right of use asset account. All this we will talk about it in Ind AS 116 for a topic later. Whenever lessee takes an asset on lease, he can show the asset. Lessee should show one asset in his books called what, sir? ROU. This ROU will now be classified as what? Investment property. Why? Is B Limited using this property or he leased it further? B leased it further and getting some rental income. Hence, B Limited will show this as a investment property in their books. This is also workable. Not popular practically. I mean, you tell me who will do this, sir? If you really want to do that, you might as well start that business, right? So this is a rare scenario, but it is permissible is what Ind AS 40 is trying to say. I hope you got this structure. No issues. That is what definition is trying to cover in everywhere. That's what they mean by or held by either the owner or by lessee as what, sir? Right of use. Right of use only we call it as ROU. More about ROU and all, we'll talk about it in Ind AS 116. No need to break your head about that. Carry on or need a minute? Okay. All right. There are some online also comfortable. You don't have to remember the definition, just you need to know the meaning. The way question turn up is, they'll not say define investment property. What they'll do is they will give you like this. They will give you one scenario. Okay, like some examples they will give you somewhere here. They will give you some examples here and they will say which standard will apply. Whether Ind AS 2, Ind AS 16, Ind AS 40, investment property or what. Those sort of questions will come. So as long as you know the meaning of investment property, that is good enough. Not necessary to literally mug up the definition, not if you want to do it, no harm. Just saying not really required. Can I move on to the next? Okay. Now, few things. Following are some of the examples of investment property. Some examples. Land, check the first one. Land held for capital appreciation purpose. And we know investment property means those which you are holding for rental purpose or capital appreciation. You are holding this land, and investment property consists of every property or only land and building? Only land only, or land and building. Other assets are not considered under Ind AS 40 ka purview. Okay, it's only land and building, it comes under this scenario. So if land is held for capital appreciation purpose, obviously it is IP, as in investment property, and Ind AS 40 shall apply. Check the next one. Land currently held for undetermined future use. You have purchased the land, but for what purpose you're going to utilize the land, you are not yet made up your mind. Now it's like you are not sure whether you'll write one group or both the groups, like that. Company has purchased the land, but for what purpose are they going to use this land is not yet defined. They may use it for their business purpose or for renting out purpose. That's it. So if the usage is not determined, still this land you'll classify it as what? Investment property is the guideline given. That's all. It's a stand that is taken over here. Understood? Okay, move on to the next. Okay, look at the third one. Building owned by the entity. So we are what, sir? Are we doing? It's an ROU or legal owner? This is an ROU or legal owner? Legal owner. Building owned by the entity and leased out under what lease? Operating lease. Okay, mind you people, when you are letting out the property, when you are letting out, it always has to be operating lease. It always has to be operating lease. If it is finance lease, Ind AS 116 says, you remember lessor. We have done this in AS 19 also. It's not a new concept to us. Ind AS 116 ka lessor and AS ka, Ind AS ka lessor accounting is same. If it is finance lease, should a lessor show the asset in his books or cancel? In fact, I had given you one problem with the journal entry and all. If you remember, I say you didn't have that books, but we solved it in AS 19. Perfect. Lease receivable to the extent of net investment is what I told. But anyway, that is not, that is required, but after 30 days, not now. Okay. Now, it has to be what, sir? When you're given the property on lease, it has to be an operating lease. Because if it is finance lease, can lessor show the asset or lessor has to de-recognize the asset? Lessor has to de-recognize or cancel that asset. That's the reason. So whenever they say an asset, a property has been let out, a property has been given on rent, that rental agreement always has to be what? Operating lease. Because if it is finance lease, the legal owner lessor has to cancel the asset as per Ind AS 116. Why about all this? We will discuss in Ind AS 116. Because then if I start explaining this, then we'll have to go into an unnecessarily Ind AS 116 topic. Any which way we have to cover that. For now, just know this. The reason for all this we will get to know when we approach that particular topic. Any doubt so far? Any doubt or okay? Alright. Now again read this line once again. A building. You are legally owner of a building. What did you do? You gave it on rent. You leased it out. What kind of a lease? Operating lease. That means will it become an investment property for you? Yes. Because your primary intention now is what? Are you using this building for your business purpose? No. Are you selling this as part of your ordinary course of business? No. You have only leased it out and getting some rental income, and that to what sort of a lease? Operating lease. That means, is this an example of investment property? Very much yes. Great. Okay, next example, a building that is vacant. So have you let it out or it is vacant? It's empty currently, but it is held to be leased out under operating lease. Currently it is vacant, but what is our intention? It's to let it out. Our intention is to not to use this building for business purpose, but to let it out. Soon we will let it out. And that too under what sort of a lease? Operating lease. So that means this building will be shown in your balance sheet as a OOP or IP. As a IP. Because though it is not let out, the intention is to let it out in the future. Hence this also will be shown in your balance sheet as a investment property itself. Okay, next one is a building or a property that is under construction. It's not fully completed. It is under construction for future use as investment property. Meaning after the construction is over, what is your intention? Your intention is to let it out, or you're being holding this for capital appreciation purpose. So that means in future, if you want to use this as an investment property, means though that building is under construction, still you will classify it as a investment property itself. So these are some of the examples of investment property. Again, no need to mug it up. If they give you this data, you should do the right classification. That's all they will ask, whether it is a OOP or a IP or an inventory for that matter. That much, if you are able to identify, that is good enough. Carry on. Ind AS 116 will be applicable. Even for operating lease, Ind AS 116 is applicable. We have to show ROU, but ROU will be shown as a under investment property. That's what. Okay, more about that we will talk there. Let's not confuse ourselves too much else. Okay, here we saw what are the examples of investment property. Next one is what is not an investment property. What are Not in. I think you already know a couple of them which are not investment properties. Tell me. A land or a building used for either to produce goods or render a service or administrative purpose. Okay. If you're using it for business purpose, then it is obviously not an IP, it is OOP. Okay. And if a property is held for sale, any held for sale asset, there is a separate standard called Ind AS 105. Held for sale, not in the ordinary course of business. In the ordinary course of business, if you are selling, then it becomes your inventory. But if you are planning to sell an asset, if you made up a mind to sell a particular asset, then Ind AS 105 will get triggered. Okay, few we have discussed, we will write. So those properties which you are planning to sell in the ordinary course of business, they are not your investment property, they become your inventory, and Ind AS 2 will apply for such particular assets. Okay, OOP, that we already know. Owner occupied property means you are using this property either to produce goods or render a service or administrative purpose. Employee occupied property. A business owns a particular building. They've given this building on rent, but to whom? Employees. Now, employees are what, sir? Employees are required for your business purpose. So, if any property, if you have let out to your employees, whether at market rent or whether are you charging lower than market rent or whether you are charging higher than market rent, doesn't matter. All employee occupied property are OOP only, meaning rather PP only, and Ind AS 16 shall apply because employees are necessary to run your business. So this is more aligned towards what? The goal here is to keep the employees happy so that the business will function more smoothly. Hence, all the employee occupied properties are classified as owner occupied property itself, and which standard will apply? Ind AS 16 shall apply. How much rent you are charging for employee is irrelevant. You may charge more than market or less than market or equal to market or no rent, it doesn't matter. Employee occupied property as a thumb rule is still OOP itself. Okay, it doesn't matter how much our rent, Shweta, employee, whatever rent employee collects, still the property will be classified as an owner occupied property itself. Fine now? Can I carry on? All right. Next one is owner occupied property awaiting disposal. Awaiting disposal means held for sale. If you are having any property held for sale, then which standard will apply? Ind AS 105. You're not selling this in ordinary course of business. Okay. You have a property. Till now you are using it for your business purpose. But now your intention is not to use that for business purpose, but to sell it. Once a non-current asset becomes held for sale, which standard will apply? Ind AS 105 will apply. So hence, there is not an investment property. Okay. You have leased one property. You have leased one property to another entity, but under finance lease. If you have given it on finance lease, can you show that asset in your books? No. Ind AS 116 says that lessor, the moment he gives the asset on finance lease, the asset has to be derecognized. So if asset itself is not there, you can't. Can you classify that asset? No. Classification drama will not arise. Hence, if it is finance lease, you don't have to. It's not an investment property at all. More about this we will study in Ind AS 116 later on. So now till now we just saw what is an investment property, what are the examples of investment property, and what are not investment property. Let's do a thing. Let's have a quick recap of this. The standard name is Ind AS 40, which talks about investment property. We can define in our own simple understandable language. Investment property means it's either a land or a building which you can legally own, or you could have got it under a building on a lease. Okay, it's maybe you either legally you own that asset or you have got it as a lease. You are a lessee who has taken the building on lease. But what should be the intention of the holding that? The intention of holding this asset is to let it out and get some rental income, or you're holding that land and building or that property for capital appreciation purpose. Rental income or capital appreciation purpose. That is one. And is it necessary the entire building you should let it out? Even part is possible. Part is also possible. Like in this example, ground floor, if you are using it for your business purpose, means ground floor will be shown in your books as a O. Though it is one building, now you will segregate. Ground floor portion, you will segregate and show in your balance sheet as OOP. First floor portion which you have let it out, you will show in your balance sheet as a investment property. So it can be whole property or even part of the property is also acceptable. That is the meaning. Then we saw some of the examples of investment property. One example is land held for capital appreciation purpose. Second one, land you have it, but for what purpose you're going to use it in future is undetermined, not yet decided. That also Ind AS 40 has given the guidelines that show it under investment property itself. Just a stand taken there, no logic. Okay. Next is what? A building, currently it is vacant, but what is your intention? To let it out. Since your intention in the future is to let it out, you will show this what? As an investment property itself. That is one. Okay, next one is, what is that? A property which is being under construction. A building is under construction, but after construction, what is your intention? To let it out. So hence, this property also will be classified as investment property itself. So these are some of the examples. So some examples of those properties which are not investment property are what? One, if you are selling a property in the ordinary course of business, then it is inventory. It is not investment property, and Ind AS 2 will apply. Then, if you have any owner-occupied property, meaning if you are using that property for either production of goods, rendering a service, or administrative purpose, then it is OOP, and Ind AS 16 shall apply. All employee-occupied properties, irrespective of the rents, are owner-occupied property, and Ind AS 16 shall apply. Okay, then what we looked at? Owner-occupied property awaiting disposal. If it is held for sale, we need to apply Ind AS 105. Is it held for sale in the ordinary course of business or one time? One time. Then which standard will apply? Ind AS 105. Now, you have given a building on rent, but you have given it on not on operating lease. You have given it on finance lease. If you give it on finance lease, Ind AS 116 says that you cannot show the asset in your books. You need to derecognize. Instead of asset, you need to show something else. You need to show lease receivable. Just say, in case you're wondering. More about that in Ind AS 116 we will discuss. Okay. Polama. Another very, very small standard. Another maybe like 4 or 5 concept is there. After that, the whole standard only is over. That's all. Because accounting and all majority is same. It falls in line with Ind AS 16. A very chintu pinto standard. Okay. Next is property is held for more than one purpose. Property is held for more than one purpose. Like what is that? Same example. Okay, I've given you the fund over here. Just check. Here, no more than the wordings they have written. Just focus more towards the comments I've written. I've simplified and written with example. That much is good enough for our understanding and examination also. The concept is what? Property held for more than one purpose. Property held for more than one purpose means you have a building. Let us say you have a 5-floor buildings. Totally, that building has 5 floors. 4 floors you are using it for your business purpose. Business purpose means either you're using it for rendering a goods or rendering providing goods, rendering service, or administrative purpose. Okay, 1 floor you have let out. 1 floor only you have let it out. Now this building is used for one purpose or more than one purpose? More than one purpose. One purpose that you are using this building is for your business. Another purpose is that you have let out. So if one particular asset, if it is used for multiple purposes, in that case, what we have to do is the concept. I think we know this. Standard is trying to throw little more light on the treatment over here. What Ind AS 40 says is, if a single property has been used for multiple purpose, first check, can you sell this property, okay, or give it on finance lease separately? Now this building has totally how many floors? 5. Right? In that 5, 4 you are using it for business purpose and 1 floor you are using it for let out purpose. What Ind AS 40 is asking you the question is, can you sell this 4 floors separately and can you sell this 1 floor separately, or can you give it on finance lease separately? Can you sell or give this 4 floors separately on finance lease? If the answer to that question is yes, if you conclude, normally that's the way it works, no? Especially if you have commercial building. If that commercial building has 5 floors, should you have to sell all the 5 floors, or floor wise can you sell it? Floor wise you can sell like apartment. If it's an apartment complex, they will have many apartments. Should you have to buy all the apartments, or even one also you can buy? One also you can buy. So that's the question you need to ask. If a building has 5 floors, ask yourself a question. Can you sell this 4 floors separately, and can you sell this 1 floor separately? Or can you at least give them on finance lease separately? If the answer to that question is yes, I can sell this 4 and 1 separately. If you can sell them separately, what standard says is account them also separately. Account them also separately. This 4 floors, what have you used in my example for? Business purpose. That means in this particular example, 4 floors of a building will be classified as what? Owner occupied property. And for that 4 floors, which standard will apply? Ind AS 16 will apply. Got it? And for that 1 floor, what have you done? You have let it out. That 1 floor alone, you show it as what? Investment property in your balance sheet. And for this, which standard will apply? Ind AS 40 will apply. This is the first part of the treatment. Any doubt or okay? Got it? Alright. Now let's take another example if you have got it. Sir, now this time around, I have only 1 floor of a building. I have only one floor of a building. Let us say, or maybe I'll write it like this. Totally, I have one floor. The total area is 1500 square feet. I have one floor whose total carpet area or total area is how much? 1500. Sir, in this 1500, 1400 or maybe let's say 1000 square foot, I have let it out. I have let it out. One room is there. One room is there which is having a 500 square feet area. That I am using it as a storeroom to store my business files. I've used this as a storage room. I'm using this as a storage room. Same example, I'm just writing it once more. Okay, sir. Now you would tell me, can I sell the 1000 square foot ka area separately, one room separately, or it's one floor only? One floor only. That means answer this question. Now, once again, go back to this example. Now you have one floor of a building. You're using it for one purpose or more than one purpose? More than one purpose. What is first purpose? Let it out. What is another purpose? Storage. Storage means it becomes under your business purpose. Yes, no? Correct? That means you are using this building for more than one purpose. Whenever you're using a building for more than one purpose, you have to ask one question. What is that one question? Can you sell it separately or can you give it on finance lease separately? Sir, in the previous example, could you have sold or given on finance lease separately? Yes. But in this example, can you sell them separately or give it on finance lease separately? Difficult. Yes or no? Correct? That means in this question, what? Can you sell it separately or you cannot sell separately? You cannot sell it or give it on finance lease separately. If you cannot sell it or give it on finance lease separately, what standard is asking you is, it is asking you one more question. Check whether the usage for business purpose, is it significant? Check whether the usage for a business purpose, is it significant? Business purpose means either you're using it for goods, service or admin purpose. The usage for these purpose, check whether it is significant or not. If you conclude, yes, the usage for business purpose is significant, it is material, then the entire property, you will not segregate. Then the whole property will be classified as OOP, and which standard will apply? Ind AS 16 will apply. Okay. Or if you conclude, no, the usage for business purpose is not significant, it is not material, it is immaterial. This is a judgment call. Okay. So if the usage for business purpose, if it is not significant, then the whole property will be classified as investment property, and Ind AS 40 shall apply. Done. Yes. Again, what is significant, insignificant, you'll have to analyze it on a case-to-case basis. There is no metrics or a percentage or any benchmark defined. It becomes a judgment call there. But I hope in the examination, they will only tell whether it is material, significant or not. It will be mentioned to you in the question. So that way you don't have to worry about that. What क्या इश्यूज हो रहा है भैया? उनको गेट खोलने के लिए बोल दीजिएगा. जब आएंगे ना तब शायद वो गेट बंद हुआ था. सिक्योरिटी को बोल दीजिए कि लेकिन गेट ओपन करने के लिए. एवरीवन इज लिविंग. अभी भैया चलेगा ना? हाँ भैया 1 घंटा और है, 1 घंटा चलेगा ना? 1 घंटे के बाद निकाल देंगे वो. हाँ आ रहे हैं क्या कोई लोग? उनको की आप ले लीजिएगा. और क्यों उनको, आई मीन यू गिव देम द कीज टू देम. भैया आप देख लीजिए. Just 1 minute, guys. Just the name, that's all. Just the name given, Ramya. Okay, you can call it as PP only, no problem. Okay, in the balance sheet anyway, we account it as PP only. Okay, just they're calling it as OOP. One more Namakarana, Namadeya. That's all. Yeah, okay. In this, any doubt in this section or got it? Paka got it? So tell me once again, what is this? This is important, all this, because from this standard, they will just give you a case study and ask the classification. That could be a popular question from this. So tell me once again, what is this concept? A property, you're holding it for more than one purpose. So if you're using it for more than one purpose means, first thing you will check is what? Can it be sold or given on finance lease separately? If you can sell it separately, then there is no headache. Then account them also separately. Owner occupied portion, you show it as property held for business purpose, you show it as OOP or PPE, and account Ind AS 16 and apply Ind AS 16 for it. Any investment property wala portion, treat it as investment property and apply Ind AS 40. However, if you are not able to sell it separately or given it on finance lease separately, then you need to ask one extra question, which is whether you are using it for more than one purpose. Check the usage for business purpose, whether it is significant or not. If the usage for business purpose, if it is significant, if significant portion is used, significant maybe you can interpret as 20% or more. Nowhere defined, I'm just saying for your reference. Okay, so if the usage for business purpose, if it is significant, then the whole property will be classified as OOP and Ind AS 16 shall apply. However, if the usage for business purpose, if it is not significant, then the whole property will be classified as investment property, and which standard will apply? Ind AS 40 shall apply. That's all. Okay, some examples. This one I have already discussed with you. Okay, the takeaway is investment property should be shown in your balance sheet separately. Okay, now we have some examples. Let's quickly run them by. Now you tell me the answer for this. Sun Limited owns a building. The building has how many floors? 15 floors. Out of this, 5 floors they are using it for office purpose, and remaining 10 floors they have leased out to tenants. Okay, under operating lease. How should you do it? If building has 15 floors, usually commercial building, you have to sell the whole building, or floor wise can you sell? Floor wise you can sell. That means this building is used for more than one purpose. But can you sell it or give it on finance lease separately? Yes. That means break our head or easy? Easy. What we have to do? 5 floors which you have used for your office purpose, you will treat it as OOP, and which standard will apply? Ind AS 16 apply. How many floors have you let out? 10 floors. That will be classified as investment property. Which standard will apply? Ind AS 40. That's all. That's all is the answer they've given here. Next one. Can we see? Yes, sir. Okay. Moon Limited uses 35% of the floor space of the building for as a head office. 35% is a small number or a significant number? Significant number. Balance 65% they have leased it out. So one property used for multiple purpose, 65% let out, 35% for business purpose. Now you tell me, it's only one area, one floor. Can you give it on finance lease separately? No. But is the usage for business purpose significant? Yes. Maybe for exam, you can take that percentage as 20% or more. Nowhere mentioned, I'm just telling. See, here it is how much percentage? 35%. So can you sell it separately or give it on finance lease separately? No. But is the usage for business purpose significant? Yes. So in this case, what will happen? The whole property will be classified as owner occupied property, and which standard will apply? Ind AS 16 shall apply. The question is the business ka portion significant? It's not the other way. I'm not saying, I'm not denying your point. But see, when there are multiple purpose, no, right? So they have to define some rule for classification. So they have defined the rule by keeping business thing in mind. So you don't compare the other one. You just check, is business ka portion significant? That's how. I'm not saying your idea. He's saying 65% is more, no. So I will show it as 65. Yes, that is also right way to look at it. But unfortunately, standard setters did not see it that way. They looked at the other way. A coin has two sides, no. So you're looking at the head. They looked at the tail side and given the answer. That's all. These are simple rules. If you don't like it, get to the top, change the rule. Okay, that's all it is. But now we'll have to follow this. That's all. All right. Example 3 is homework. Take it. Maybe we will review. It's okay. I think in fast track batch I gave it as homework. This one I think we will review. No problem. Okay. An entity owns a hotel. Stop there, sir. Sir, in hotel, what happens? Can you tell me? In a hotel, or maybe I think I'll read. This may not be the. I think 1 second. Entity owns a hotel which include health and fitness center, housed in a separate building. Oh, okay. Sir, you have a hotel building. Obviously, when it's a fancy hotel, means they'll have one building or multiple structures. Multiple structures. Let's say in a particular area there are 2 buildings. One building is used for is a pure hotel. Another building is used for what purpose? Health and fitness. Maybe yoga room, gym room, or whatever. And are they together or these two are housed separately? Housed separately means these are separate building. Okay, these are separate building. Okay. That is part of the premises of the entire hotel. It is still within our building complex only. One portion is used for hotel purpose. Another building is used as a fitness spa or gym purpose or whatever. The owner operates the hotel and other facilities on the hotel with the exception of health and fitness center. All other portion who's using? Owner only for his business purpose, except what? Health and fitness center. What have we done for health and fitness center? Which can be sold or leased out under finance lease. So can you give this health and fitness center wala building? Can you sell it separately? Yes. Can you give it on finance lease separately? One of the two is good enough. Here both are permissible is what they are saying. The health and fitness center will be leased out to an independent operator. The owner doesn't want to operate this gym center or a spa center, fitness center. They have leased it out to a third party. Third party within the hotel premises is running this gym or spa or whatever. And we have let it out to him and collecting what income? Rental income. The entity has no further involvement in this health and fitness center. Tell me what we have to do here. Now we have one building. Let's take simplicity purpose. We have one building or two buildings? Two buildings. One for hotel, another one for fitness center. Is fitness center run by this owner? No, they have leased it and collecting some rental income. That means we have within our compound, within our area, we have two buildings, right? Okay, now ask the question. Are you using this for one purpose? This whole complex, are you using for one purpose or multiple purpose? Multiple purpose. Okay, one is for hotel, another one is for fitness. Can you sell them separately or give it on finance lease separately? Yes. If you can separate them, headache or account it separately? Account separately. So hotel building, you will account it as what? Hotel ka building, you will treat it as owner occupied property. The fitness center wala building, you will classify it as a investment property. That's all you'll have to do over here. Any question? No? Good. Okay, move on to the next. All right. Look at the next example. If the health and fitness center could not be sold or leased out on finance lease. Same example they have taken and extended it a little further. In the previous example, they told that health and fitness buildings, you can sell it or give it on finance lease separately. Now they've just modified the above example and they're telling if the health and business center could not be sold or given on finance lease separately, what would be your answer? You cannot sell them. That means which one you will use? Now you will check whether the usage, if you cannot sell it separately or given it on finance lease separately, then you will check is the usage for business purpose significant. Sir, you are running a hotel business. That means obviously the building used for hotel purpose is what? The building used for the business purpose is obviously significant. That means what? Should we have to segregate the thing or whole? The whole property will be classified in that case was what? Owner occupied property, and which standard will apply? Ind AS 16 shall apply owner occupied property. Okay, na? Yes. No. We are saying can you give it on finance lease? Okay, the criteria is can you sell separately or can you give it on, are you eligible to give it on finance lease separately? It's not necessary you have to give it on finance lease. You are checking is it possible for you to let it out on finance lease. That is the rule. Okay, you got the distinction? Here we have not let it out on finance lease. If you actually give it on finance lease, can you show legally if you are the owner and if you give the building on finance lease, can you show that building or you have to derecognize? Derecognize. The rule is saying can you sell it separately or can you give it on finance lease separately? That's all you're checking. Are you eligible to give is what we're checking here. Ramya, did you get? We have not given it on finance lease. Where have we given it? In the third example, Ramya is saying we have given it on finance lease. No. Check here. The owner operates the hotel and other facilities in the hotel with the exception of health and fitness center, which can be sold. Which can be sold or leased under finance lease. That means, do we have the eligibility to give it under finance lease? Yes. Did they say we have given it on finance lease? No. Check what they told. The health and fitness will be leased to independent operator. What sort of lease have they given? No. Obviously, if you want to show this building in your books means this lease has to be what? Operating lease only. If it is finance lease, can you show it or you have to derecognize? Derecognize. This is okay, ma'am? Fine now? Great. Any other doubts or need a minute to review? Next one now. Okay. Next is sometimes what happens, sir? We just don't let out the building. We also give some service. Like let's take the example of a hotel. In hotel, what essentially happens? Khana pina. No, I'm talking about the boarding wala. Not your normal restaurant, not your khana pina types. Your normally when you, let's say you went to Switzerland, you will stay in one hotel. In hotel, generally in hotel business, rooms are let out. Rooms are let out maybe for 1 day, 1 week or 1 month or whatever, depending on the client requirement. That means essentially you're letting out a room. That means what, sir? If you're doing a hotel business, that hotel building, should you show it as OOP or IP? Understood my question? Sir, IP means investment property means what? Intention is to let out land and building for what? Rental income or capital appreciation purpose. In case of a hotel business, the business, the business idea is what? They will let out the space, they will let out the rooms and earn rentals. Correct or no? They will charge. That means if you are running a hotel business, that hotel ka building, should you show it as IP or OOP? IP or OOP? Because essentially you are letting it out. If you are letting out means you're collecting rent too. Rental income buildings only we call it as IP. So IP or OOP? What do you think your answer? OOP. Why OOP? Sir, that is what is this question fund all about. Okay, normally, no, sir, in hotel, just the rooms will be let out or extra service also will be given. Extra service also will be given. Yes, no, if you want to go to places, they will arrange car for you. They will give you food. Correct, no? They will give you a wake-up call. There will be so much of other facilities which is given in the hotel. That means, are you just letting it out or are you also giving some service? You're also giving a service. So in some cases, what will happen? You will not just let out the property. You will also give some service. In such case, what you have to do is the concept. I'm not telling you the answer. I'm discussing the concept. So far, good? All right. Now, if you are not only letting out, but you are also giving some service, you need to check whether the service provided is significant, whether service provided is material. Sir, in case of a hostel business, in case of a hotel business, service provided usually will be significant. Service provided usually will be significant. So you're not just letting out, you're also giving other service, other major service you're giving. So if service provided is significant, then the whole property will be classified as OOP, and which standard will apply? Ind AS 60. So to answer my question, if you are running any hotel business, that hotel building will be classified as what? OOP only. In case of hostel or PG, it is debatable. You have to analyze on a case to case. Because in some hostels, you don't get any food. They only let it out. But in some hostels, you get other facilities also. There will be gym also. They will wake you up also. They will give you some security service also. They will give you laundry, food. So many services they will give. So you'll have to analyze. So if service in hostel, if service is provided, if service is not provided, only rooms are let out, or service is provided is not significant means, then that hostel building will be classified as IP. But if they are giving a major service, if they're not just letting out, but they're also giving some other service, in that case, that hostel building will be classified as OOP. You have to analyze. In case of hotel, definitely it will be OOP, because they don't just let it out, they also give other significant service. But in case of hostel or PG or all, you will have to analyze it on a case to case. Based on the information, the answer can slightly vary. Once more, or got it? Got it. Okay. So if service provided is significant means it becomes what? OOP. If service provided is not significant means, so you are letting it out and you're giving some service, but is that service significant or not significant? If service provided is not significant means, then the entire property will be classified as investment property. Example. So normally when you take a building on rent, there will be some security. The owner may give you some security service or some routine repairs. If your building has 3 floors, they will appoint some cleaning persons to clean the whole building. So all those are significant service or some routine service. Routine service. So if you're giving some security or some maintenance service and all, then we say service provided is not significant, then that property will be classified as investment property. Analyze, they will give you all this data. Accordingly, you can decode it. Wait, carry on. Same thing, whatever I've written here only, they've summarized it as a pointers there. Don't worry about the pointers. I think it's easy to just grasp it in this chart format. So I've just summarized it. If you concentrate on this, that's good enough. Over now, people. Next one. Okay, this one is done online. If you need some time to copy or anything, let me know. So I'll wait for you. If I don't hear anything, I'm thinking that you're good. Okay, one more case. Sir, for hotels, PG letting out is ordinary course of business, then it is categorized as inventory. No. Someone is saying, sir, in hotel business, you are doing it as an ordinary course of business. Sir, in hotel, inventory means that which you sell in the ordinary course of business, right? Building itself, are you selling in your ordinary course of business? No. So we are talking about building here. Hotel ka building, do we sell it regularly? Hotel ka building, are we selling it on a daily basis? No. So that means that is not inventory. Okay, inventory means that which you sell in your ordinary course of business. We are not selling the building over here in case of hotels or hostels or PG or whatever. Hope that is clear. Anything more? Okay, next one. Okay, let's look at this. Property leased to other group members. You remember in your CA intermediate, you studied consolidation. Consolidation will happen between random companies or specific. Which specific companies? Holding, specifically we're talking about holding and subsidiary company. Yes or no? Okay, let's look at this particular. That's we call it as group companies or group members. Holding company and subsidiary company only we call it as a group company or group members. So let's look at it. They've just written some para. Let's look at a small case and understand what they're trying to say over here. Okay, let us say H Limited is there. They have 100% stake in S Limited. So that means H Limited is what company? Holding company. In AS 21 terminology, we used to call it as holding company. Ind AS calls this as parent. Instead of holding company, we call it as parent company. S Limited, we call it as subsidiary company. More about this, we will study in Ind AS 110. There are about 3-4 standards backing this, 5 in fact. Okay, that we will start after 15 more days or so. It will come. Big ticket topic. Now it's a small glimpse of it is affecting our investment property standard. Let's review that. So H Limited has 100% stake in S, means H becomes your parent and S becomes your subsidiary company. Now H Limited owns a building, sir. They own a building which they have let it out to S Limited. The parent or the holding company has leased the building to which company? Subsidiary company, and charging some rental income. Let's say 1 lakh rupees per month. They are leased it out and collecting how much from the subsidiary company? 1 lakh rupees every month. That means this building, H Limited, is using it for their business purpose or let out purpose? Let out purpose. So in H Limited financial statement, H Limited should show this building as what? H Limited should show this building as an investment property, because the intention is not to use it for business purpose but to let it out. And in fact, they have already let it out under operating lease only. Hence, it will be classified as what? Investment property. Any doubt till here? No. Now S is using it for their business purpose. Okay, S has taken the building on lease and they're using it for business purpose. We are not talking for that. Now leave this. This is not the drama. Now whenever parent and subsidiary company is there or holding subsidiary company is there, we have to prepare also consolidated financial statement. That only we call it as CFS. Consolidated financial statement. Now, from H Limited perspective, this property is what sort of property? Investment property. There is no doubt, because H has let it out. And in fact, collecting some rental income. So H will clearly show this as IP. But from the group perspective, group means CFS perspective. From the group perspective, group means only H or H plus S. Group means H plus S put together. From the group perspective, the group is using this building for let out purpose or still business purpose only. H let out the building to whom? S. And what is S doing it? They are using it for business purpose only. That means from the group perspective, did you let out this to a third party vendor or it is still used for business only? It is still used for business purpose. That means in your CFS, will you show this building as a owner occupied property? IP what? In your CFS, you'll have to show this building as a owner occupied property, because from the overall group perspective, from the overall group means parent and subsidiary put together. From the group perspective, you have not let it out yet. It is still being used for business purpose only. So in your CFS, you will show this property under which classification? Owner occupied property classification. That's all it is. H in their individual financial statements, when H prepares their own balance sheet, they will show this property as investment property. Only in consolidated balance sheet, you'll have to show this as a owner occupied property. That's what this para is trying to summarize. Got it up? Again, I think once this question came somewhere to marker MCQ, somewhere I remember reading this somewhere. Maybe in old syllabus, old pattern, or somewhere I remember seeing this once. Next one. Okay. This was the major part of the standard. Remaining and all is because this was only highlight. Remaining and all repetitive. Okay, first one, maybe we'll review this. What if S Limited has sublet the same? Okay, now Sabarish is saying, sir, what if S Limited gives it on sublease? If S Limited has given this on a sublease to Z Limited, is Z a part of the group or outside the group? Outside the group. That means in that case, in consolidated financial statement, will you show it as OOP? No. In that case, it becomes IP. Because S has also subleased, means from the group perspective, that building is not used for business purpose. Purely it is being let out. So in that case, classification will be IP. Dana. Can I move forward or anything else? Okay, this question. We'll do it. I'll keep this as an LDR question. Okay, so now I'll read out the scenario. You need to tell me what is the classification and which standard will apply. Don't look at the solution, only look at the screen. Okay, a property is owned by the company and it is leased under operating lease. Tell me, sir, which property? You own a property and you have given it on lease. What kind of a lease? Operating lease. So you will show this as what? Investment property, and which standard will apply? Ind AS 40 will apply. Okay, like that. Next one. You are holding it as a right to use asset. Right to use asset means you own that building or you are a lessee. You have taken the building on lease. After taking the building on lease, what did you do? You subleased it under what? Operating. You leased it further. Though you don't own the building, but you have taken the building on lease and subleased. In this case also what? Investment property, and which standard will apply? Ind AS 40 only will apply. Okay. Now you don't own that building. You are holding it as what? Lessee, and the name of that asset is ROU, right of use asset account. After taking the building on lease, what did you do? You again leased it out, but this time you have given it on what sort of a lease? You have given it on finance lease. If you give it on finance lease, can you show the asset or you have to derecognize? If there is no asset, where is the sort of classifications? That means, can this be considered as an investment property? No. This will come under which standard? Ind AS 116 wala standard. And as per Ind AS 116, can you show the asset or you have to derecognize the asset? You have to derecognize the asset. Great. Next one, property acquired. You purchase the property with what intention? With an intention to develop it and resell it. So you will buy a property, maybe you will buy a land. From that land, you will develop a building and you will sell that building. Okay, so with an intention to resell, it looks like this is part and parcel of your operation. This is part and parcel of your operation. In fact, they should have specified this, okay, because it can give rise to a little ambiguity. Okay, but the intention will be what? Usually nobody will buy a land to construct a building and to sell it if it is not their general business. So if you're doing this, generally it will be what? It is part and parcel of your business. So something, a building which you are selling in ordinary course of business is your IP or inventory. In this case, it becomes inventory, and which standard will apply? Ind AS 2 shall apply. Okay, no? Okay. A property which is partly owner occupied and partly leased out under operating lease. So we have one building, that building wala example. One building we have, one floor we have used for business purpose, another floor we have let out. In this case, what we have to do? Or rather, you can answer this question like this. Sir, this question depends on what? If one property, if it is used for multiple purpose, you need to ask one question. First question is what? Can you sell it separately or give it on finance lease separately? If the answer to that is yes, then business usage purpose, show it separately as owner occupied property. Leased portion, show it separately as what? Investment property. If you cannot sell it or if you cannot give it on finance lease separately, then what do you have to do? Then you need to check whether the usage for business purpose, is it significant? If the usage for business purpose, if it is significant or material, then whole property will get classified as OP. Otherwise, whole property will become IP. I mean, there is one answer or multiple options. That's the reason they've written here, depends. Depending on the facts of the case. We can't give one answer for this. Okay. Sir, but if resale after 3 years long, then it becomes IP. It doesn't matter. It's not the period. Okay. Someone is saying, sir, I am developing the property and I am reselling it. Okay, but I am to develop the property, it will take 3 years. So just because if it takes more than 1 year doesn't mean it is not inventory. Inventory means it's not necessary that you have to sell it within 1 year. Sir, if you are an aircraft manufacturer, aircraft can you manufacture within 1 month? Especially Boeing aircrafts and all, Airbus and all, it may take 1 or 2 years to manufacture and sell them. So sometimes your business may be such that to produce your goods, it may take 2, 3, 4, 5 years also. If you're a bamboo dealer, bamboo takes around 5 years for growth only, right? No, so that's still inventory only. Intention. If your intention is to sell it in the ordinary course of business, then it will still be an inventory, irrespective of the period. Majorly, the period will be less than 1 year for inventory, but sometimes, depending on the product, it could go beyond 1 year also. No. If it's something which is selling in the ordinary course of business, then it is inventory. Like that. It either will be one. Don't go by the line by line there. Okay. They would have just given you an example just for understanding purpose. Okay. Don't literally stick to that word over there and just interpret. Fine. It will be either one. Okay. Inventory also can be long-term in nature. That way. Fine, or any reservation is still there? Can I move forward? Okay. Land held currently for undetermined use. You have a land, but for what purpose you're going to utilize? Known or not yet known? Not yet known. That is also will be guideline given as what? Show it as what? Investment property only. A property occupied by employees. Should have to worry about the rent or not required? Paying rent at lesser than market rate. It could be less than market, equal to market, more than market, whatever. Still it will be what? Owner occupied property, and which standard will apply? Ind AS 16. Investment property held for sale. The moment a property, whether it's owner occupied property or intangible asset or investment property, the moment it becomes held for sale, we have a separate standard called Ind AS 105. That will get triggered. We'll study the standard in a couple of days as well. Okay. Existing investment property is there that is being redeveloped for continuous use as a investment property. Like let's say we have 3 floors of a building. One more floor we want to construct. After constructing one more floor, what we want to do? Let out that also. That means 3 floors we have already let out. One more floor we want to construct and again let out. Currently it is investment property. After constructing one extra floor also it is what? Investment property only. So which standard will apply? Ind AS 40 only will apply. That's it. Review all this quickly. I mean, these sort of questions may be a little popular. Please explain why 7 becomes PP rather than IP since employee receives rent. No, there's a guidelines given. Okay, it's not a logic driven. It's a guidelines given. The moment you let out a property to your employees, when a company lets out a property to their employee, the main intention is not to recover the rent. The main intention is to retain the employee. It's like a perquisite. Studied in your income tax perquisites, no? So employees are primarily used for what purpose? Business purpose. So the moment you have let out a property to your employees, the intention is to use them for the business purpose. Hence, the guideline here straight away given is Ind AS 16. You have to classify them as owner-occupied property irrespective of the rent. You can charge whatever rent for it, but still employees are primarily necessity of the business. Hence, it's just a guideline given. Okay. Fine now. Carry on. Okay. Now this one, see, this is where I like. Recognition criteria, initial cost, inclusions, consideration, depreciation, disposal, everything is same as Ind AS 16. Ditto. Okay. Only one change is there between Ind AS 16 and Ind AS 40. One is the classification. Another one is this. Sir, you tell me PP, all property, plant and equipments, or maybe can I call it as OOP now? All owner-occupied properties are initially recognized at cost. Okay. Subsequently, either you can go for cost model or revaluation. Initially, all investment properties are also recognized at cost. Cost for this purpose also same. Purchase cost, DAC and DSR. Ditto. Same as Ind AS 16, no change. But subsequently, only cost model is allowed for investment property. Initially, you will recognize all investment property at cost. Cost is same. Purchase cost, DAC to DSR, ditto, no change there. But at subsequently, only cost model is acceptable for investment property under Ind AS 40 guidelines. This is a carve out. Carve out mean? Differences between IFRS and Ind AS only we call it as carve out. Ind AS says for investment property you can also follow revaluation model. IFRS allows that. But in India we have only restricted and adopted only cost model. The reason is you could have adopted it. Maybe their thought process is it's a land and building. No, value fluctuates a lot. We are developing nation. No, so fluctuation may be too much. So there could be a big hit on the financial statements. Maybe that's a thought process in the standard setters. That's the reason for investment property they have only permitted what model? Cost model. Could be the idea. I've not seen the justification. Just my view that why they have given it like that. None people. But we are following what IFRS or Ind AS for our exam. As per Ind AS revaluation model allowed or not allowed? Not allowed. So in our examination, we will say only cost model is acceptable for investment property. And this is a carve out. That's it. Next one now. Okay, next one. Now all the questions. Questions literally almost every question I can give it as homework. Literally everything. Because nothing new. Sir, will you give it as homework, sir? No, few we will do. Okay. Few, if it's very straightforward, I've solved all the questions for you, Bajaman. So you can review and refer them. At least few things quickly we will do. Just pay attention to the question. All these are small, one or two liner wala question. No lengthy practical solving questions are not there much. So check here. X Limited owns a building which is used for rental purpose. Rental purpose means OOP or IP. It's investment property. The building ka carrying amount is how much? 50 lakh. X Limited, the company, recently replaced interior walls of the building, and the cost of new interior walls is how much? 5 lakh. Old interior walls, they replaced it with a new one. The carrying amount of the original walls is 1 lakh. Stop there and tell me which concept. Which concept? Repairs. Concept, specific concept. We have discussed this in Ind AS 16. Battery example. Replacement of parts. What did we say? When you replace a part, a new part ka carrying amount you will add. Old part ka carrying amount you will de-recognize. This is what you have done here. New interior walls you have substituted with in place of old walls. So is old walls there or physically removed? Physically removed. But old wall ka carrying amount remaining is how much? 1 lakh. Can you show this or de-recognize? De-recognize. So tell me what is the impact you will give? Before this drama, what was the carrying amount of the building? 50 lakh. How much did you incur as a new part ka cost? 5 lakh. New part ka cost, provided RC is met, you will capitalize. From new interior walls, obviously you will get some benefits. Cost is also measured reliably, which is 5 lakh. So add this. But old part ka carrying amount you need to reduce. So how much is the old part ka carrying amount given? 1 lakh. Reduce it. How much you gonna get? 54. That's all. Is this a new thing to us or same? Same. Just you need to identify which concept of Ind AS 16, accordingly give its treatment. Because Ind AS 16 ka and Ind AS 40 ka almost major accounting are same only. This is over according to me. What about you? Good. That's all. Like this, we have some 10-12 questions. All this level only. The structure. Can I carry on? Okay, now check. Sun Limited acquired a building in exchange for warehouse. So this scenario is what? Exchange scenario. Okay, doesn't matter. Exchange ka concept of OOP and IP are also same. What did you purchase? Building. But what did you give away? Warehouse. Whose fair value is 5 lakh. The warehouse you have given a fair value, or you have given a warehouse. Warehouse ka fair value is how much? 5 lakh. And did you give up only warehouse, or you also paid some cash? Cash. How much cash you paid? 2 lakh. Whereas building ka fair value is given to be 8 lakh. Tell me, sir, company decided to keep the building for rental purpose. They acquired the building through exchange transaction, but that building they want to use it for business purpose or rental purpose. Rental purpose means this building will be classified as what? IP. But this is a which concept? Exchange. Any difference between Ind AS 16 or same? Ind AS 16 ka, Ind AS 40 ka exchange concept is same. Tell me, sir, you will record building at what value? Quickly tell. Or tell me the entry or else. Now I think we can review. Entry will be building account debit or investment property building account debit. First figure out the entry, then we will see the amount. To what? What did you give up? Warehouse. So you will write to PPE warehouse. That's all, or you also give some cash. Cash. How much cash you gave? 2 lakh. So credit cash by 2 lakh. What else you give? Warehouse. If you have given a warehouse means, can you show that warehouse or you have to de-recognize? De-recognize. You have to re-recognize at what value? Carrying on. That they have not given. Hang on. So leave it at that. So this investment property which you acquired, now you tell me, is this building and warehouse same? Building and warehouse. Warehouse is more like a storage room, storage area, and building could be your corporate office wala stuff. They are identical in nature. Do they look the same? Will they be in the same area? Will you get the same cash flow or they are different? They are different. That means the transaction has a commercial substance. Can you ignore the fair value or consider? Consider. What fair value will you consider? Fair value of the asset acquired or given up? Given up. And one asset you gave up or two? Two assets you gave up. What and all you gave up? Cash and warehouse. Warehouse you gave up. Warehouse ka fair value is how much? 5 lakh. You have given up two assets. One is warehouse whose fair value is 5 lakh. You have given up cash whose fair value is 2 lakh. So total fair value of the asset given up is how much? 7 lakh. So that means this particular building which you have acquired will be recognized at 7 lakh. So 7 lakh debit, 2 lakh cash credit. PP, that is warehouse, you will credit at book value. Book value they have not given. So as the assumption is the fair value of the warehouse and the book value of the building warehouse is same. Assumption they have made. Okay, because they have not given a specific carrying amount of the warehouse. Suppose carrying amount was 4 lakh means this warehouse ka carrying amount was 4 lakh means you would have credited only 4 lakh. Balancing figure would have been gain or loss due to exchange. Here, since carrying amount of warehouse is not given, they have assumed that the fair value of warehouse and book value of warehouse are same. Just an assumption to finish up. Any problem here or okay? Ditto? You should not have ideally issues with this, I believe. Yes. Sir, why are we not recognizing 8 lakh, sir? No, now you should not ask all those questions. 8 lakh is what? 8 lakh is a fair value of the building acquired. This is what? Fair value of the asset coming in. What does the exchange rule say? We have studied this in Ind AS 16, Ind AS 38 also. Whatever, if the transaction has commercial substance, we have to compulsorily use fair value. Whatever asset is coming in, it has to be recorded at what value? Fair value. The first priority for fair value is what? Fair value of the asset given up. First priority, you will always give it for the fair value of the asset given up. Here, do you know the fair value of the asset given up? Yes. How much is that? 7 lakh. If this is known, other one we will not touch. Only if this is missing, if fair value of the asset given up, if it is missing, then we will touch which? Fair value of the asset acquired. If both ka fair value, if it is missing means, then we will ignore fair value and consider book value. Like that. Yeah. Okay. Cool. Maybe little lapse of judgment there. Okay. No problem. Done. This one. Okay. This is the DAC wala question. Remember, various costs, what and all can be added, what and all to SPL. That wala question. You purchase the building for how much value? 30 lakh. Just watch out for the question. Nowhere. Just check the screen. That is good enough. All one liner answer. Nothing much. You purchase the building for 30 lakh in 1st May. Purchase price was funded by a loan. Great. Their problem. Property transfer taxes and other direct legal costs are what? 1,20,000 respectively. So these are what? In order to use the building or make the building ready to use, are these costs necessary? Yes. I mean, these two are known as what? Take your calculator. So we should ignore them or add them. Add them. Take 30 lakh, add 1 lakh, add 20,000. That's what they've done here. 30 lakh, 1 lakh and 20,000, add. Done. Next, we will see the other cost. What other cost they're given? Okay, we purchased it on 1st May 20x1. Okay, in 20x1x2, in that particular year only, X Limited redeveloped the building into retail shops. The building was there. Now, we don't want to let out the building as it is. We want to develop into what? Retail shops and then rent it out. We don't want to sell it. We want to rent it out. But do we want to sell that, rent it out, the building as it is, or first convert? Convert it into some retail shops, maybe smaller unit, and then give it on rent on what sort of a lease? Operating lease. That means what, sir? This building will be classified as OOP or IP. This building becomes investment property in this particular case. Okay. So if you want to convert an existing building into a retail shop, obviously there will be some construction cost. That construction cost, will you transfer it to SPL or capitalize? All that concept of Ind AS 16 and Ind AS 40 are same. So how much cost you incurred for developing them into retail site? 2 lakh you had to pay for some planning permission. Maybe some government charges you had to incur. This 2 lakh will go to SPL or capitalize? Capitalize. Because this is also required. No. Unless you get permission, can you convert them into retail site and let it out? No. In order to make sure that investment property is ready to use, is this 2 lakh cost necessary? Yes. I mean, this becomes what? This also becomes your DAC. So 2 lakh also we should add. Great. Another 7 lakh rupees you incurred as construction cost. Construction cost SPL or again capitalize? Capitalize. But they told this 7 lakh includes 40,000 refundable purchase tax. Refundable taxes, do we add? No. Only non-refundable taxes we will add. But this 7 lakh includes 40. So means we should add what? We should add 7 lakh or we should add only 660. 660. That is one way. Or you can add 7 lakh and deduct 40. That way also you can do. Yes, sir. So that means net mein, what is the total cost of the building? The initial cost of the investment property is 39 lakh 80,000. That's all. Now you agree with my statement? Everything is homework, Anta. Tell me, even if I don't do this, you can manage on your own. Yes, no, nothing much. Hopefully, let this only come in exams. Yeah. Who knows? Can come. Some straightforward questions will also be there. It's not like full paper will be like tricky anta. Okay. Next, X Limited. Check this. Purchased a land worth 1 crore. It has an option either to pay full amount at the time of purchase or pay it over 2 years at a total cost of 1.2 crore. Stop. Which concept? Deferred credit wala concept. This is like unknown to us or a similar one? Similar. Tell me, what is a deferred credit ka concept? You have to record the investment property or for that matter owner occupied property at cash price equivalent. Cash price equivalent means today's value. So how much is that worth of the land today? 1 crore. If you pay now, you have to pay how much? 1 crore. Or you have an option to pay after 2 years, but not 1 crore. If you're making the payment after 2 years, you have to pay 1.2 crore. Tell me, what should be the cost of the building under both the payment method? If you pay, what doesn't matter whether you have two options, either to pay 1 crore now or 1.2 crores after 2 years. If you go for first option means pay 1 crore. In that case, the building will be recorded at what value? Obviously 1 crore. If you go for second option, that is making 1.2 crore ka payment after 2 years, in that case also this building will be classified at or valued at 1 crore only. Because this 1 crore becomes your cash price equivalent. The transaction price is your 1.2 crore. The difference between this 1 crore and 1.2 crore is time value of money ka interest charges that goes off where? The 20 lakhs will be treated as interest charges and it will go off to SPL. That's why you right. Same deferred credit wala concept. Doesn't matter which option you go for, investment property or building will be recorded at 100 lakhs or 1 crore itself. Okay, next one more is, this also I've seen 1 or 2 times being tested in a bigger question. They'll frame it as an adjustment. Transfers. Transfer meaning reclassification. Okay, sir, till now I had a building which I was using it for my business purpose. Okay, now till now I have a building and I'm using it for business purpose. That means that building I'm classifying it as what? Owner occupied property. But there is an economic meltdown, global slowdown. Okay, some recession vara environment. So I feel I have to cut my operations a little. I have to reduce my operations. Now I feel I don't need this building. I don't need this building. Now I want to let out this building. Till now I was using this building for my business purpose. So it was an owner occupied property. Now my intention is same or it changed? Changed. Now what is my intention? To let it out. So if you are letting out a property under an operating lease, it is an owner occupied property or it becomes IP. In this case, what? Meaning from OOP, a property can become IP. Or it could be other way around also. From IP, it may become OOP. Till now, I was letting out a building. It's a boom environment. Business is booming. I need a space. I have shortage of space. Now, will I let out or use that building? Use that building for what purpose? Business purpose. Till now, I was letting it out. Now, I've changed my intention not to let out, but to use it for business purpose. That means now, from IP, I have to reclassify it as what? OOP. Possible? Similarly, from IP, it can become inventory, or from inventory also you can reclassify it to IP. Fine. I was in the real estate business. For a real estate dealer, buying and selling building is part and parcel of their operation. That means it was what? Inventory. Now I've decided to stop that business. I don't want to do that business only. Okay, I want to start another business. Whatever 1 or 2 properties I have, I just want to let it out. I just want to let it out. That means till now it was classified as what? Inventory. Now I have to change my classification to IP. So any of these 4 combinations might work. That's what they have given over here. Done. This is what we refer to as what, sir? Transfers. This concept only we call it as transfers. So whenever transfer happens, standard is saying, okay, just again a rule they've given as a viewpoint. Whenever transfer happens, use carrying amount. Use what, sir? Carrying amount. Meaning, let us say investment property in first example, or OOP rather, was shown at 1 lakh. Before the transfer, OOP was shown at what value? 1 lakh. That means now is it OOP or it has become IP? IP also will be shown at what value? 1 lakh. Whatever is the carrying amount of this asset, same thing becomes the carrying amount of other asset also. Meaning these transfers are done at what amount? Carrying. Not fair value, it is done at carrying. It means what? You will book any gain or loss or no gain or loss? No gain or loss. That's what I've written here. Transfers are always done at the carrying amount. No profit or loss is accounted. That's all. We'll apply this in the next question. But did you understand the concept? Can we go for the next question, sir? Question number 5. Okay. Moon has purchased a building on 1st April at a cost of 10 million. Fine. The purchase cost is 10 million. The building was used as factory. Stop. Factory means IP or OOP. So currently you're using this building as a factory means it is OOP. You purchased at a cost of 10 million means this 10 million is what? Original cost. Okay. And this for OOP we have what, sirs? Initially I'll have to measure the property, all property, plant and equipment at cost. Subsequently, either you can go for cost model or you can go for revaluation. What did the company go for? Company has gone for this factory cost model. Great. The useful life of this building is 10 years. Keep the date in mind. You purchased this on 1st April 20X1. Due to decline in the demand of the product, the company does not need this factory anymore and it has rented out the building to a third party from 1st April 20X5. Okay, sir, how many years have you used this as a factory building? From 1st April 20X1 till 1st April 20X5. That means, can I call it as 31st March? Is it okay? From 1st April 20X1 to 31st March 20X5, I've used this as a factory building. How many years? X2, 31st March X2, 31st March X3, X4 and X5. How many years? 4 years. 4 years if I've used this building means, will the cost be 10 million only or I have to depreciate? 5 or 4 no. From X1 to 31st March 20X5. From 1st April 20X1 to 31st March 20X2 1 year. 31st March 20X3 second year. 31st March 20X4 third year. 31st March 20X5 fourth year. Only 4 years I've used now. Okay, not 5. Gnana Saundarya, okay ma? Yeah, 4 years I've used this building means I'll have to depreciate the asset. Tell me, what is the depreciation? Can we do it in calculator? It's fine, no. So originally you bought it for how much? 10 million. Is there any residual value? Not given. Not given. So that means what is your depreciation, sir? 10 million minus residual value 0 divided by useful life. What is the useful life of this building? 10 years. If you do this, you will get depreciation for 1 year. We need it for 4 years. How much is it? 4 million. You bought the asset for 10 million. It is depreciated by how much? 4 million. So what is the carrying amount of OOP? Because till now it is OOP only. So the carrying amount of OOP on the date of transfer. On the date of transfer, the carrying amount of OOP is 6 million. Is it okay if I review this? Comfortable with this? No? They ask you, again, they will ask you as a MCQ question maybe at best. That's okay, no? Just first get the carrying amount. Before the date of transfer, get the carrying amount. So if the carrying amount of OOP is 6 million means, now is it OOP anymore or your intention has changed? Now your intention is to use this as a factory or rent it out? Rent it out. That means now can you show it as OOP or IP? Now you will show this as a carrying amount of IP. What? If this is carrying amount of OOP on the date of transfer is 6 million means IP ka carrying amount also will be 6 million only, because transfers are always done at carrying. Just the reclassification in balance sheet will happen. Instead of showing this under property, plant and equipment, now you will start showing under investment property at a different value or same value? Same value, because transfers are always done at carrying amount, no gain or loss. That's what we need to write. On the date of reclassification, first find the OOP ka carrying amount. That itself becomes IP ka carrying amount after reclassification. So after reclassification, will depreciation change? First of all, our investment property depreciated? Yes, sir. All that is same. Okay, depreciation, no, everything is same. The only distinction is for PPs, even revaluation model is acceptable. For investment property, only cost model is acceptable. Okay, cost model means will you depreciate the asset? Yes. Will you impair the asset? Yes. All that concept is same. Okay. So means if the data is same means next year ka investment property ka depreciation will change or it will be same only. Every year ka depreciation is how much? 1 million. Depreciation concept, no? That's what I've wrote over here. Everything is same. In fact, I wrote it also. Yeah. Here. Depreciation, recognition, cost inclusion, exclusion, cash show, credit to exchange. Everything is same as PP. Even investment properties are also depreciated. Do not forget that. I think we have such questions later on, but just see. This is good. I would rate this transfer concept to be little more important in this. One is the classification, whether it is OOP, IP, inventory, whatever. That question I would rate it little highly. And even this transfer question, I would rate it little highly from this particular concept, because the rest everything is pretty straightforward. This particular question is more related to lease. You solve this after Ind AS 116. Don't worry about it now. Okay, let this be. For now, you take it as homework. After Ind AS 116, you can come back to this question. Till then, let it be on hold. Okay. Now, disclosure. Sir, how much will you do it today, sir? Nothing. So this question is over, sir. We'll finish off this. Okay, Chintu Pinto standard. All next 4-5 questions we have ditto same only. Matlab, similar scale of things conceptually. Disclosure is again not that very important, but one disclosure I feel personally may be relevant, which I've just called it out here, and I would suggest you to remember this. One, sir, for investment property, is revaluation model allowed or only cost model? Only cost. For investment property, only cost model is acceptable. What Ind AS 40 says is, you show investment property or you account it using cost model. Fair value you disclose. Fair value you disclose. You don't use fair value for accounting purpose. Fair value you only disclose. Fair value for investment property only for disclosure and notes to accounts. That is one. Under this, they have given a further couple of pointers. What is it? Sir, suppose you are constructing a building. A building is under construction. Is it easy to find fair value? A building which is completed, it's easy to find out a fair value. A building which is under construction, is it easy? No. So that is what they're trying to say over here. If investment property is under construction, then entity has a choice. What choice? If you know the fair value, disclose it. Because standard acknowledges the pain point that if a building is under construction, it is difficult to find the fair value. So if investment property is under construction, entity should disclose fair value only if it is available. And once you disclose it, okay, then compulsorily every year you need to disclose. Suppose a building construction will take 10 years. A fancy building, maybe another Burj Khalifa you want to construct. Okay, 10 years time. First year completed or still under construction? Under construction. First year you show investment property ka fair value. First year you disclose the fair value. Second year entity is saying I will not share fair value. Not acceptable. Once you disclose fair value, every year you have to go on disclosing the fair value. That is the catch given there. Okay, disclose only if it is available. But once disclosed, you have to show it every year. No escape there. Next point is, what if investment property is already completed? Or what if investment property, if you have purchased? For a full-fledged investment property purchase, if you purchase the whole building, or if the building construction is already completed, is finding fair value a difficult task or an easy task only? Easy task. So for a completed investment property or a purchased investment property, compulsorily you need to disclose fair value. By chance, if you say I don't know the fair value, you need to justify with reasons. On what basis are you saying that I cannot find out fair value? That you need to justify in notes to accounts. As a thumb rule, disclose the fair value. If by chance, if you're not able to figure out fair value, justify it with reason in your notes to accounts. This one point, remember, in case they ask again as an MCQ. Rest everything, not much required as such. It will not come here. Investment property means only land or land and building, not other assets. Okay. If you have given some intangible assets and all on rent, you will have to apply Ind AS 116 for it. Leases. It will not come here. This is only land and building ka coverage. The scope of the standard is only this. Carry on. Okay, next one is also ideally homework, but anyway, 2 minutes mein. Let's review it off. On 1st April 20x1, entity acquired investment property, that is building, for how much value? 40 lakh. Useful life of the building is 20 years. Stop. Our investment properties are also depreciated? Yes. Okay. All right. Measured from the date of acquisition. The residual value of the building is 2 lakh. Okay. Management believes that we have gone for straight line method. This question is an insult to your knowledge. They are asking you what is the carrying amount of the building on 31st March 20x2. You purchased at year beginning. At the end of the year, they are asking carrying amount. Pakka. What then? You just have to reduce 1 year ka depreciation. How much is that pa? 40 lakh is the cost. Okay. Minus the residual value is 2 lakh. What is the life of the building they have given? 20 years. If you do this, how much are you getting depre? 1 lakh. They told 1,90,000. 1,90,000 is a depreciation. That means what is the carrying amount? You bought it for 40 lakh. You depreciated by 190. So that means the carrying amount at the end of the year will be 38 lakh 10,000 at year 1 ending. That's all. Chintu Pintu. Okay. Oh, pray that this only comes in exam. For 5 marks. Yes, no? All right. Next. X Limited has an investment property building which is carried in the balance sheet at 15 lakh. Currently, you are showing that building in your balance sheet at 15 lakh. Not original cost, it's a carrying amount given. During the year, currently it is what property? Investment property. Okay. What is that carrying amount of investment property? We will write that first. The carrying amount of investment property given in the question is how much? 15 lakh. So far, we have identified that. Then what happened? During the year, the company has stopped letting out. If they have stopped letting out means, can it be an investment property anymore? They have stopped letting out the building and they want to use it as what purpose? Office premises. That means now, will it be OOP? It'll be an IP or it will become OOP? It will become OOP. So that means this scenario only we call it as transfers. For transfers, we use fair value or carrying amount. Carrying amount is missing or given? Given. How much is that? 15 lakh. If IP ka carrying amount, and sir, not random carrying amount. We want carrying amount on the date of transfer. On the date of transfer, you need to find out the carrying amount. Have they told which day have they transferred this? No. Sometimes they will play around with data. Just maybe one more question I will construct. Let us say carrying amount, or maybe I'll finish this and construct one more question. You tell me how. Here, have they told on which day the transfer happened? From IP to OOP, on which day did you do this reclassification? Date is given or missing? Missing. So what is the carrying amount of IP? 15 lakh. If IP ka carrying amount is 50 lakh, means we'll assume that on the date of transfer, carrying amount is 15 lakh. Now is it IP anymore or OOP? So carrying amount of OOP also will become how much? 15 lakh, because we'll use the same carrying amount. Gain or loss will not be accounted. So far, okay? Alright, moving on to the next question. Now on 31st March, management estimates recoverable amount to be 10 lakh. Recoverable is investment Ind AS 40 ka concept or what? Ind AS 36 ka impairment concept. So how much is recoverable amount? At the end of the year, the recoverable amount is given to be 10 lakh. So do we have any impairment loss here? Yes. Now don't compare investment property. Is it on 31st March, is it investment property anymore or OOP? OOP. OOP ka carrying amount is how much? 15 lakh. Recoverable amount is how much? 10 lakh. So that means, is carrying amount greater than recoverable amount? Yes. By how much? 5 lakh. So what is that 5 lakh? Impairment loss which goes off to SP. And after impairment loss, will carrying amount be same or will get revised? It will get revised. So from 15 lakh, carrying amount will reduce by 5 lakh and it will become 10 lakh rupees. That's all is there, what they are asking. Done now. Okay, let's build one more scenario. Sir, let's say carrying amount of investment property on 1st April 20X1 was 15 lakh. Okay. Remaining useful life is 5 years. Residual value, I've given it as 0. Okay. I'm just giving a few pointers. Okay. D pointer on 31st March 20X2, from IP it became OP. They'll give you this in wordings. Intention changed. Oh, now you're using it for business purpose. So, but the funda is from IP it will become OP. In this case, what you will do? First, now the solution. Will you say OOP ka carrying amount will be 15 lakh? IP ka is 15 lakh. OOP ka also will it be 15 lakh? No. First, what we have to do? First, we have to find a carrying amount of IP on the date of reclassification, or if you want, you can call it as transfer. How do you get that? Sir, 15 lakh is the carrying amount. Carrying amount of 15 lakh. When did you reclassify? At the end of the year. That is 31st March 20X2. This 15 lakh is a carrying amount on 31st March 20X2 or at year beginning? Year beginning. That means you need to reduce 1 year ka depreciation. So 15 lakh is a carrying amount. Now reduce depreciation. How much is depreciation? 15 lakh is a carrying amount. Residual value is 0. Remaining useful life is 5. So if you do this, you will get depreciation to be how much? 3 lakh. So the carrying amount on the date of transfer will be 12 lakh. So therefore, carrying amount of OOP will be how much? It will be 12 lakh in this case. On the date of transfer, we need to find out the carrying amount and you have to use that for reclassification or transfer. Like this also they can ask. This is a better suited question actually than the previous one. Next. Okay. 9th question. Again, a chinto pinto. 1 minute you want. Okay. Others can review the next question and solve it off. Review it. Nothing. 5 minutes if you spend over that question. Yes, for impairment, for investment property also, investment property impairment loss concept will come. Yes. Okay, next. In the financial year 20X1X2, X Limited incurred the following expenditure in acquiring property consisting 6 identical houses. So we have 6 houses, each with a separate legal title. That means they are all one, or you can separate them. Separate legal title means you can sell it separately. Now you know what sort of question they will ask. In this 6, so some you will use it for business purpose, some you will go for rental purpose. So that means you need to like segregate them. Okay. And moreover, you are acquired this property. How many properties have you acquired? 6. Keep that in mind. With 6 houses each with a separate legal title, including the land on which it is built. So you're not acquiring it, rather probably you are building it, I think. Okay. The expenditure incurred on the various dates is as follows. Sir, purchase cost of the property. How much did you pay to purchase the 6 properties? 1 crore 80 lakh. Can we add this to the cost? Yeah, purchase cost you can add. Non-refundable taxes you pay 20 lakh. Can you add this? It is not included in the above purchase cost. This 20 lakh is not included in 20 lakh. First of all, non-refundable taxes can you add? Yeah, that's also you can add up. So we have written add. Legal cost acquired to property acquisition. Is legal cost a DAC? Yes. Can you add this? Yes. 5 lakh also you can add. Advertisement expenditure, opening ceremony cost and so that means indirectly we are not constructing this property, we have acquired this full-fledged property. But this advertisement, opening ceremony cost and all capitalize or SPL? SPL. So far we have identified the cost. Sum it up, how much is this? 180 lakh plus 20 lakh is 2 crore. 2 crore plus 5 lakh is 2 crore 5 lakh is the total cost of one property or 6 properties. Keep that in mind. 6 property ka total cost is 2 crore 5 lakhs. Now what they told. In the year 20X1X2, we've incurred 1 lakh rupees day-to-day repairs and maintenance. Day-to-day repairs and maintenance capitalized or SPL? SPL. That has gone to SPL. Okay, now what they're saying. The company X Limited uses one of the 6 houses for office purpose. In this 6, one is used for office purpose and accommodation of its few staff. For that one property, we are using for this purpose, office and some accommodation we are giving. The other 5 houses are rented out to the various independent third party, not to our employees. The balance 5 houses are given out on rent to the third party. So what do you have to do, sir? Out of the 6 houses, how will be the classification? All the 6 houses are same, or in the 6 houses the split is 5 and 1, and all the 6 has a separate legal title. So can you sell them separately? Yes. 5 is let out to independent third party means this is IP. 1 is used for office and employee means it is OP. You just need to figure out how much is the cost. That's what they're asking. How should X account to the above mentioned expenses? You need to give a justification. You need to copy this data in a table and write, say this cost will be capitalized. This cost will go off to SPL. Or you can write it in sentence format also. Done. Finally, can you tell me what is the carrying amount of investment property? Investment property, what is the carrying amount? Totally how much cost? You spend many cost. Everything you are capitalizing? No. 180 you capitalized, 20 lakh you capitalized, legal cost of 5 lakh you capitalize. So total is how much? 2 crore 5 lakh. 2 crore 5 lakh is for how many? It's for 6 houses. How many users have you let it out? 5. For 5, how much is it? 1 crore 70 lakhs 83,333. So in 2.5 crore, this much is investment property means balance will be O. Or you can also calculate also. 2 crore 5 lakh is for 6 houses. How many houses have you used for business purpose? 1. For 1, how much? 34, 16, 667. No, that's what they've calculated here. That's done. Oh. You can also, okay. If you have understood, you can say in words. I'll get it. No need to throw things. Yeah. Fine. Done. Okay. Next, I'll keep this also as a little bit of an LDR question. Sometimes comes for 2 marks ka MCQs. Even if I don't mark, I'm sure if it comes, you'll be able to manage them. Okay. Okay, this is a good question. I think it came in, yeah, I think it came in May 2018 paper for 10 marks. Okay, 10 marks. That attempt ka paper, that attempt, people are very lucky. Okay, nothing here, some chintu pintu things, adjustment they gave and asked it for 10 marks bumper that too. We'll read the question, see what it is. Okay, you have to just add garam masala here, nothing. Question looks big go. Pure garam masala. So check. Question number 10. Let's see what we can learn from this question. Star Limited is a multinational entity that owns 3 properties. Fair enough. All the 3 properties are purchased on 1st April 2016. The details of purchase price, market value they have given. Okay. Sir, 3 properties they have given. Look at the screen. Property number 1 is used for what purpose? Factory. Sir, if you are using it for factory purpose, means it is IP or OOP? OOP. Second property also you have used for factory purpose. I mean, this is also what? OOP. Third property, it's a let out building. A building let out, is it OOP or IP? IP. Sir, if it is let out to employees, it becomes OOP, no sir? Have they told? No. When they say let out, it is always the normal assumption is it is let out to a third party, not to the employees. If it is let out to the employees, they will mention to you in the question. So if you have given it on rent to a third party, it is obviously which property? Investment property. Now your concepts and all one by one should come in. 1. Sir, OOP and IP are same. Are they shown say in a same line in balance sheet or separately? Owner occupied property, you'll have to show them separately as PP. Investment property you need to disclose separately. For your owner occupied property, either you can go for cost model or revaluation model. But for investment property, compulsorily only cost model and fair value is only disclosed. Yes. Okay, that concept is okay. Both these properties are subject to depreciation. Yes, no? You will charge depreciation on all these properties. This is just the main differences. Because rest every concept is same. Okay, so let's see what our Brahaspati accountant has done. Purchase price, first property you purchased it for 30,000. Market value at the end of the year is how much? 32,000. Sir, did you purchase all these properties at the end of the year or beginning of the year? Beginning of the year. That means what? Current year you need to charge 1 year card depreciation, because the data that they are talking about here is they will have mentioned somewhere here. In fact, they told market value as on 31st March 2017. So year is year ending on 31st March 2017, but you purchased this property on 1st April 2016. 1 year card depre you need to charge. Look at this. For charging depreciation we need life. Okay, given it as 10 years. Initially, you know that all property, plant and equipments and investment properties have to be measured at cost. Subsequently, either you can go for cost model or revaluation model. Look at our accountant. Sir, both are factories. One they went for cost model, another one they went for revaluation model. Acceptable. I mean, there are a lot of mistakes here which we need to identify and correct. That's all is this question all about. Here they went for cost model and here this factory they went for revaluation model. Acceptable, not acceptable. Either both have to be accounted under CM or both have to be accounted under revaluation model. That is one mistake. So we need to correct that and redraft the data. Whatever data is given. That was a question. And look at here. Third one is an investment property. They valued revaluation model. Acceptable, not acceptable. So violating. We need to call out that. That is one. So we have identified a couple of mistakes here. Okay, next. Property 1 and 2 occupied by stars, while property 3 is let out to they've specified a non-related third party at market rent. So third party they've rented. So it is obviously investment property. The management presents, the company is presenting all the 3 properties in balance sheet as PP. They're showing all the 3 as PP. Correct. One more wrongness we have identified. What is that? Sir, property 1 and 2 you have to show it under PP because they are owner occupied property factory. Property 3 you'll have to show it as IP. You need to call out. So simple provisions you need to justify and correct it. So you have a lot of pointers. You can write provision and then correspondingly you can write the correct adjustment. Like that, some 8 to 10 points, whatever points you are able to identify, you need to call out. That's all it is. So here some I have called out here. Make sense? Huh? They've given you a lot of stories. Don't write it in para format. Write it in pointers. That's good enough. Done, Aji? Okay, let's see what they've given the next. The company does not depreciate the property. Throw that accountant, I tell you. The company does not depreciate any of the properties on what basis? On the basis that their fair value are exceeding the carrying amount. So we already studied this. for depreciation, is fair value relevant or irrelevant? We do the depreciation provided useful life is limited and DA is positive. Is fair value relevant or absolutely irrelevant? That the provision you need to follow. Okay. So that means they have not charged depreciation, means the value that they have shown is correct or wrong? Wrong. So we need to depreciate them and show it at the right way. That is one more data we have got. Okay, next what have they told? Okay, evaluate whether the policies adopted by the company is correct as per the Ind AS. If not, you have to advise the correct treatment. That's what. Your first sub 5-6 points full give. Okay, one more, some calculations you can do and calculate. What is that? One, they have not charged depreciation. Calculate that and show. But one more point you need to keep in mind is about this. One, they're going cost model, one factory cost model, another factory revaluation model. Acceptable, not acceptable? Not acceptable. That means either you'll have to follow cost model or you have to follow revaluation. Both you need to work out and show like this. Because they've asked the correct treatment. Now, correct treatment is either you'll have to go for cost model or you'll have to go for revaluation. If cost model is followed, what will be the value of PP? If revaluation model is followed, what is the cost of PPs and investment property you need to call out? Can we calculate? A simple one. A balance sheet extract is prepared. Can you prepare whole balance sheet? Have they given the data? No. Only what? PP ka OP ka data they have given. Only that component show it in your balance sheet. So make balance sheet extract. Heading is asset. Under assets, non-current assets. Under non-current assets, first property, plant and equipment. Under PP, how many properties will come? All the three or only 1 and 2? Only 1 and 2, property number 1 and 2, which you are using as factory, will come under PPE. Calculate, sir. Here only you calculate and tell me. The company, our accountant has not depreciated. All the 3 properties they have not depreciated. Should we ignore depre or calculate? Calculate depre and tell me the carrying amount. First of all, here only small line I'll write it. What does the depreciation tell? You purchased it for 30,000. Residual value not given. 0. Life is how much? 10 years. That means depreciation will be 30,000 minus residual value 0 divided by life 10. So you will get depre how much? 3,000. So what will be carrying amount at year end? 30,000 you purchased for. If you have depreciated by 3 means the carrying amount will be 27,000. Easy. Okay. Property number 2 ka. You purchased the asset for 20,000. Residual value 0. Life is 10 years. So 20,000 minus 0 divided by 10 if you do? 2,000. So carrying amount will be 20,000 minus depreciation of 2, it will be 18,000. Third one ka, you purchase the property for 24,000. Residual value not given 0. Life is 10 years. So the depreciation will be 2,400. From 24,000, if you reduce 2,400, I think you'll get 21,600. This is the carrying amount. That's what you need to call out here. If cost model is followed, property 1 ka carrying amount will be how much? 27. Property number 2 ka carrying amount after depreciation will be 18. Third one ka 21,600. So that's what you need to call out here. Okay, this property number 1 and 2 will come under PPE category. So total PPE will become 45. Property number 3 will be classified under investment property whose value will become 41 or rather 21,600. That this one you just need to calculate and put it across. This is for what model? Cost model. Any problem in this? All okay? Online also? No issues? Hanji? Okay. So next one is only cost model acceptable or even revaluation? Revaluation model acceptable for IP or only OP? If revaluation model is followed, then what? For revaluation model, it's very easy. Revaluation model means you have to show the asset at fair value or market value. Market value you have to calculate or given. If revaluation model is followed, property 1 will be shown in your balance sheet at 32. Because at the end of the year, market value or fair value is 32. This value, property 2 ka market value is 22. So that means the value will be 32 and 22. 32 plus 22, if you add, what are you going to get? 32 plus 22 will become 54,000. So in that case, property, plant and equipment will get reflected in your balance sheet at 54. Okay. But for investment property, can you do revaluation model or only cost model? That means value will change or same. How much is the previous ka value? 21,600. So here also it will be 21,600. Yes, sir. But when you do revaluation model, you may get some revaluation gain. Revaluation gain is a reserve. Reserve will come on the liability side of balance sheet. We have reserves in surplus category now, or we have what? Instead of reserves and surplus, Ind AS ka balance sheet name is other equity. So you need to give the balance sheet ka that extra equity and liability under that. I mean, you can give whole or you can just write it as other equity. Under other equity, you will get revaluation reserve or RR. Revaluation reserve or RR. Okay. Sir, in revaluation model, we don't calculate depreciation. No, I told you this. When do you do the revaluation? In the year end. When at year end, when you do the revaluation, first you reduce the, how do you get revaluation gain or loss? Compare carrying amount with market value. If you are doing revaluation at the end of the year, first reduce depreciation, then you will get carrying amount at the end of the year. Compare that with market value, then you will get revaluation gain or revaluation loss. If you are doing revaluation at the year beginning, then compare the carrying amount at year beginning with market value at the year beginning. Thereby you will get revaluation gain or loss. Due to revaluation, carrying amount will get revised. Take that revised carrying amount and then calculate depreciation. So depreciation will always come even if you follow revaluation model also. Fine. Now both the scenario, I think we've worked. Problems are available for both the types of scenario just now I told. Fine, Amma. Okay. So now let's calculate. Sir, here you're doing the revaluation at the beginning of the year or they gave the date. Check. They have given the market value at the end of the year. Okay. So first find the carrying amount. How do you get revaluation gain or loss? RR. Maybe I will do it as a table. We can put up a working note here. RR. So particulars, we have one property or two properties. I'll call it as P1 and I'll call it as P2. Property number 3 anyway is investment property. For investment property revaluation model, allowed or not allowed? Not allowed. First we need what, sir? Carrying amount at the year 1 end. In fact, I'll write the date only. Carrying amount on, we did the revaluation on 31st March. What is that? 2017. No? Yeah, 31st March 2017. What is the carrying amount? Should we have to find this or already done? For cost model, we already calculated that. After reducing depreciation, the carrying amount is how much? For property 1, 27. For property number 2, 18,000. Yes, sir. Now, revalued amount or market value or fair value on same date. That is 31st March 2017. Missing or given? Given. How much is that? Market value 32 and 22. This is required or not required? Not required because there's an IP. 32 and 32,000 and 22,000. So now tell me, happy face or sad face? Carrying amount at the end of the year is 27. Market value is 32. So that means you're getting revaluation gain. For property 1, 5,000. For property number 2, 18 is a carrying amount. Market value is 22. So it's a revaluation gain of 4. So total RR is how much? 9,000. So this 9,000 will come in your balance sheet under other equity as RR 9,000. This also you need to put it up and calculate. You can show it like ICI, the way they've calculated directly inside here. Or you can put up a working note like this, show it and then present it directly 9,000 in your balance sheet. Choice of presentation is yours. Got it? Huh? Tell me, easy question, that too for 10 marks, you know. Around. Just that you should know the provision to write some pointers. Some 7-8 points, you should be in a position to write it. That's all. That anyway, you will get it from the provisions. As long as you're able to do that, I think, yeah, this is a pretty straightforward question. Done now. According to me, this question is over. Yes. Okay. Now, question number 11. Again, it's a question on DAC. So simple. You know, DAC, if it's an investment property, DAC will you add? Yes. It's a homework question. Take it, nothing there. Just one DAC you need to add up. Nothing else is there. 12th question, full build up. They gave nonsense and nonsense and nonsense. In reality, nothing is there in this question. Okay, let's anyway quickly 2 minutes again we'll review of this question. Shaurya owns a building called Building A, which is used for earning rentals. If you are using any building for rental purpose, means it is investment property. The company has not been using a Building A or any of its facility for own use. Own use means business use for a long time. That means this has been used only for rental purpose only. They're justifying that, yes, it is an investment property. Okay. Company is also exploring the opportunities to sell the building if it gets reasonable amount in consideration. They're open enough to sell, but they have not made a concrete decision. Okay. So that means it is not held for sale, sir. No. Sir, if you want to classify a non-current asset as in PP or investment property as held for sale, no, there are some conditions for it. It's not that today you decided to sell means immediately you will apply Ind AS 105. For you to apply Ind AS 105, there are some conditions. Maybe tomorrow or day after I'll tell you what are those conditions. So for now, the way I read it, these conditions are not satisfied. What are those conditions? I know, but if I tell that now to you, it will not make sense to you. You will get to know that it is not held for sale after maybe 4 days. When I do that particular data. For now, it is not a non-current asset held for sale. You trust my word for the time being. Okay. Later on, you can confirm with, you can come back to the question and recheck on that. Okay. Following information is related to building A for the year ending 31st March 20X2. Okay. Building A was purchased 5 years ago. Sir, investment property, do you depreciate? Yes. When did you buy it? 5 years ago. At what cost? 10 crores. Life of the building is how many years? 20 years. Company following straight line method for depreciation. That means tell me how much is depreciation every year. Cost is 10 crore. Residual value not given 0. Useful life is 20 years. So that means 0.5 crores or 50 lakh is the depreciation every year. How many years back did you buy the asset for? 5 years back. So far, how much depreciation have you already charged? 2.5 crores is the depreciation per annum. For 5 crore it will be, or 5 years it will be 2.5 crores or 250 lakhs. Yes, sir. Done. This is the data they have given 5 years back. So, I mean, this is what? Current year ka depreciation or depreciation till 5 years? 5 years. Till 5 years, you have charged a depreciation of 2.5 crore. Current year depreciation also you should charge. Not yet charged. Okay, during the year, company invested in another building called building B. You already had a building called building A. Okay, that was purchased 5 years ago and 5 year depreciation is already charged. In the current year, one more building you added called building B with the purpose to hold it for capital appreciation purpose. A property which is held for either rental purpose or capital appreciation. Both are what? Investment property. So even your building B is also an investment property. This property was purchased at the end of the year or beginning? Beginning. Sir, the data is, I'll tell you, the current year ka balance sheet, somewhere they must have given. Okay, they have given. For the year is, current year is ending on which date? 31st March 20X2. This is our current year ka ending date. This building B, when did you purchase? Building you purchased on 1st April 20X1. At the current year beginning, you purchased this building B for 2 crore. So will you depreciate this building? Yes. For one whole year. Okay. Life of this building is 40 years. So tell me the debris for this, sir. 2 crore minus residual value 0 divided by 40 years useful life will be 0.05 crores or 5 lakh rupees. Okay. Again, you are going for straight line method. Now, during the year 20X1, X2 current year, company earned or incurred the following expenditures or income relating to building A and building B. So for building A, rental income, you have let it out, no? So that means rental income will be there. Now you tell me rental income and all, where it will go? SPL. Sales promotion expenditure, fees, rent, repairs, legal, commission. Sir, building is already ready to use. Building is already ready to use. We have already let it out. That means the cutoff stage is already reached. Once the cutoff stage is reached, all the expenditure will go off to SPL. Even rental income also will go off to SPL. Chumma one line you need to write. All this expenditure goes off to SPL. Even this rental income also will be transferred to SPL. Okay, Naji. Big story they constructed. I don't know why. Just to freak out. But literally no them at all. Someone just woke up and now saying, which question, da? Okay. The company does not have any restriction or contractual obligation. No contractual obligation means DSR is there or not there? Not there. DSR cost not there. If DSR is there means? Present value of DSR cost should be capitalized. For complying with the requirement of Ind AS, management sought an independent report from the specialist so as to ascertain the fair value of building A and B. The independent valuer valued the fair value of the property as per the valuation model recommended by the International Valuation Standard. Golly, sir. How that guy has done valuation, they have given drama. Why do we need that, sir? We want ultimately what? Give us the value. Give us the value. Okay, so that means all these are some disclosure pointers. You remember in Ind AS 16 we discussed, if you have done, if you adopt revaluation model means, then you need to disclose was independent valuer involved on what day you did revaluation. What is that value or assumptions? So in examination, if they ask this point only, cut, copy, paste. Okay, whatever. These are all is assumption. Per square feet, this is the value, that value, this value is given the assumption. Take the same thing, but instead of 3 lines, if they're given 3 lines, try to cut short and make it as 1 line. Ditto, cut, copy, paste, you have to give it as a disclosure in notes, because these are also assumptions which you need to disclose. That's all. At the end of the day, that means all this is relevant for our accounting or irrelevant? Irrelevant. What would be the treatment of building A and B? Appa karma khanda. What is the treatment, sir? You just need to reduce depreciation. That's all. For that to so much story. Literally, what is the cost of building A? Tell me, sir. Building A ka value, what is it? You bought it for 10 crore. You have already depreciated this building for 2.5 crore. This is the 2.5 crore is a depreciation for the last 5 years. Current year also you have to depreciate. What is current year ka depreciation? 0.5 crore. That means what is the total depreciation? Total carrying amount at the year end is how much? Carrying amount of building A at year ending is ultimately 7 crore. Okay. Similarly, what is the carrying amount of building B at year 1 ka or year ending only we can call it. You purchased building B for how much value? 2 crore. What is its depreciation? 2 crore was the value for which you purchased. 5 lakh rupees or 0.05 crore is its depreciation for this year, means the value will be 1.95 crore. So that means the total value of this property or investment property. So let it out. No, so that means this is not OOP, this is an IP. So investment property totally will be shown at what value in your balance sheet? 8.9 crore. That is all is a final story. Other things are all disclosure points. Few expenses and income will come in SPL. Remaining points are all disclosure to be given in notes to accounts. Because if it is investment property, you need to disclose the fair value along with some assumption. Okay. If it's anyway investment property, can I do revaluation model or not allowed? Revaluation model is not allowed, but fair value you need to disclose along with the necessary assumptions. So which they have given here. This and all is the assumption which they have given in the question. Don't ask me how this came. This is a copy paste from the question. Don't write the same thing like ICA is written. Some 3-4 points you write, good enough. Okay. Doubtful that this and all will be asked. It's a shameful thing to ask. But sometimes it could be a trick question. Nothing is there, but they'll make the question 2 pages. So. And then you'll say, oh, so much, better. We will not answer it. Yeah. But ultimately there will be nothing in this question also. So read the question. Don't judge it purely by the question ka size or for that matter solution ka size. Okay, people. So thank you.